first reading. Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structures Bill 2024. Supplementary Appropriation 2023 to 2024 Bill. Waste Disposal Amendment Bill 2024. Second reading. Secretary for Financial Services and the Treasury. President, I move the second reading of the Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structures Bill 2024. The bill seeks to implement two profits tax enhancement measures proposed in the 2024-25 budget, including the introduction of a tax deduction for expenses incurred by businesses in reinstating the condition of lease premises and the removal of the time limit for claiming annual allowances in respect of industrial and commercial buildings or structures. In respect of the first measure, the bill provides that with effect from the year of assessment 2024-25, taxpayers may claim tax deduction for reinstatement costs if they fulfill specified conditions. The conditions are simple and clear. They include: A. The person claiming the deduction is a lessee of the lease. B. The person claiming the deduction has an obligation to reinstate the premises under the lease to their original condition at the end of the lease term, or on early termination of the lease. The obligation may be expressed or implied, and oral agreements are covered. C. The reinstatement costs claimed for deduction must have been incurred and are reasonable. As reinstatement costs generally account for only a small portion of a taxpayer's turnover, we do not envisage that this measure will have a significant impact on government revenue. For the second measure, taxpayers who own industrial or commercial buildings or structures are currently allowed to claim an annual allowance equivalent to 4% of the construction cost, subject to a maximum period of generally 25 years from the first use of the building or structure. We simply refer to this period as the usage period. If a taxpayer sells the building or structure during the usage period, the IRD, Inland Revenue Department, will calculate the residue of expenditure, and the buyer may claim annual allowances based on the residue of expenditure over the remaining years within the usage period. However, if the sale takes place after the end of the usage period, the buyer cannot claim any allowance under existing legislation, even if there is still a residue of expenditure on the building or structure. This arrangement may discourage buyers from purchasing old or second-hand buildings or structures in the long run. The bill will therefore amend some provisions of the Inland Revenue Ordinance to provide that for industrial or commercial buildings or structures sold in or after the basis period for the year of assessment 2024-25, irrespective of whether the usage period has expired at the time of sale, the buyer may claim an annual allowance at 4% of the residue of expenditure until the residue of expenditure is fully claimed. For buildings or structures which are sold after the end of their usage period and before the basis period of assessment for the year of assessment 2024-25, the buyers may still claim an annual allowance at 4% of the residue of expenditure until the residue of expenditure is fully claimed if they still own the buildings or structures in the year of assessment 2024-25 and thereafter. The potential revenue foregone is estimated to be about $164 million per annum. President, the two proposed profits tax enhancement measures will not only help reduce the tax burden of enterprises, but also improve the business environment of Hong Kong. I hope members will support the passage of the bill so that the relevant measures can come into effect as soon as possible. I so submit. Thank you, President. I now propose a question to you that the aforesaid bill be read the second time. In accordance with the rules of procedure, the second reading debate is adjourned and the bill is referred to the House Committee.
Secretary for Financial Services and the